Hello again. This is Stephen Wilson, and I am a libertarian running for Congress in the state of Missouri, U.S. Congressional District number 3 in 2012. And this video is going to help explain a possible solution for the tax model that we have. To begin with, we need to go ahead and set up a foundation. Hopefully you were able to look at the other video that deals with the overall tax theory. But to go through a real quick recap, I'm going to use the anchors of median household income, the discount rate from the Federal Reserve, and the state unemployment rate. Now, the reason for the median household income is because statistically it is superior to understanding the actual purchase power and earning power in your domain in a set period of time. It is superior against the mean, or the mean income of your domain. The discount rate is a reference to the rate that is offered by the Federal Reserve for lending to banks. This is normally identified in finance as helping us understand something called the velocity of money in your economy. The unemployment rate obviously is something that helps us indicate that the relationship against the total number of possible workers against those still looking for work. We're going to be dealing with a legend that allows us to understand that Z is going to be last year's state unemployment rate. DR is going to be the discount rate set by the Federal Reserve. If the rate does fluctuate during January 1 to December 31, it will be taken as an average. And the algebraic symbol A, the lowercase, is going to be identified as a multiplier, which will be fractional, to help us break down per tax strata. And finally, we're going to still maintain the odd-even separation. We're still going to maintain the dual existence of the entities, human and a business. And we're still going to require that all declare their income, and that's going to be revenue from January 1 to December 31, regardless of your age, the amount, or the source of the income. To begin with this model, we need to start at the idea that tax model A is identified as source neutral, which means that when we identify the aggregate total of the income or the cash accounting from January 1st to December 31st for the people of Missouri, we're going to include government and private sector income. This model is going to take the entire amount of income or revenue from that time period, and we are not going to remove anyone from that aggregate based on the source of that income. Now, to begin, because we established early on that the median household income indicates statistically what is going on in our own domain per year, that's going to be the identifiable tax floor, which means that once we set the median household income, anyone that earns below the median household income is not going to pay. They still have to file the amount that they made, but they will not have to pay any income tax. When we start building those tax stratas, really it doesn't matter how many. For this particular game, I went through a total of 4. Basically, we're just talking about a very simple multiplier. We're talking about taking the median household income and doubling it, and that's going to be tax strata 1. We take that amount plus 1, and then we go into tax strata 2, and we go through 2 times the median household income, all the way through 3 times the median household income, and et cetera, et cetera. That's fairly simple, I think. When we start talking about the fractional multiplier that in our formula that we looked at in the last screen, the algebraic lowercase a is going to be set per tax strata, And for this particular game, we are going to set it as follows, as you can see on the screen. We're going to set it at tax strata 1 is going to be 0.5, 2 is going to be 0.75, 3 is going to be 1.25 is going to be for strata 4, and 1.5 is going to be strata 5. Now we're going to move on to some examples to hopefully get you to understand how simple this is, which is going to cut down on the labor expense, and it's also going to help everyone really get rid of the overall production cost and the labor of accounting. For this particular model, this example is set for tax model A, which is going to be source neutral. And here we have, for this particular year, let's say that we are in the even year and the individual has to pay their taxes. So in this particular year, the median household income for Missouri is $40,000. The citizen R has an income of $91,450, and we go through the analysis that was set forth in the other screen, and we're able to ascertain that this individual falls in tax strata number 2. If we take the formula and we go from the 0.75, we identify that the discount rate during this year is 1. We identify that the unemployment rate is 8.5. So we go through our calculations and we take 91,450 and we multiply it times 0.0713, and we get $6,520.39. This is what the citizen owes for this year's taxation. Now we're going to move into the example for tax model A that deals with a business. The assumptions that we are going to make for this particular game are going to be that we are in the odd year. Therefore, the businesses in Missouri have to pay their taxes. For this year, the median household income is going to be $45,000. Company R has an income or gross revenue of $689,714. We build our tax strata and all of our tax tables based on a formula of 5 times the median household income. So for this year, if you went down through the tax stratas, you would be able to ascertain that Company R fits in tax strata number 3. In the algebraic, the multiplier is going to be 1. So we identify the discount rate for this year at 1.25, and then the Z and the NZ are, Z is the state unemployment rate, NZ is the national unemployment rate, and this is going to be decided by the Secretary of State's office and the chief executive or the president of the company that's going to be paying the taxes from the business. Basically, this is going to be trying to prove if they only do business locally, or if they go outside of Missouri, or they go outside of the U.S. If they do business outside of America, or if they do business outside of Missouri, it doesn't matter if it's physical or if it's internet, product service, it doesn't matter. If they have one customer outside of Missouri, they have to pay the national unemployment rate. So if we go through the calculations, we identify that the algebraic will be in the 10.5 and the 9.25 respectively, and then we go through if the company did business in throughout, or I'm sorry, if the business does operate outside of Missouri or outside of America, their tax would be $72,419.97. If they just operated in Missouri, they would be paying $63,798.55. It's also important to note that you can't go from being a human to a business to avoid your taxation. Once you're a human, you stay human. Once you're a business, you're in business until the end, or till the end of the company, that is. It is now time for us to start dealing with something that has been a little bit of a problem for this model and for the people that have tried to understand it and make it their own. the tax allocation and exemption part of this is something that it really is about making sure that the citizen stay extremely active in their citizenship and in the state government. Um, and just real quick, the taxpayer is going to break down how their tax revenue is to be spent at the time that they pay it. There's a real quick example at the bottom left-hand corner of the screen, and it just says simply, I would like my taxes to be used for, and then you just break it down in a quartile that, I mean, obviously make sure that it gets to 100%, but basically it's up to you where your money goes. And it's not important that these people go through their own kind of campaign, people in public assistance trying to argue that they need more money than National Guard, or that the roads need more money than schools. That's not the point. The point is that the voter and the taxpayer understand where the revenue is going because they put the money there. If there's any kind of corruption that takes place within that, the voter and the citizen are going to have to take responsibility for what they've done. The second part is just basically in times of peril. Only in times of famine, disease, or invasion can the state overturn the allocation mandate, and it is the responsibility of the voters to make sure that they pay attention to the state ledger. On the bottom right-hand side, you can see in red lettering, there are no exemptions for this model. That means that whatever gross income you have, whatever amount you have, that's what you got to pay. And when we start looking at some of the other rules that you see there, one of the things that appears to be a little bit of a problem is that in this particular model, only the taxpayer can decide where the funding goes. That has nothing to do with the Democrat or Republican, the body politic, the chief of police, the principal of your school. Only the taxpayer can do it. So those people that are underneath the median household income, they're not going to have the ability to actually go through a campaign and get someone to allocate funding towards one thing or the other. Basically, the tax allocation part of this is based on the same model that we use in sales, based on purchase power. It's your money. So if you see a product or service cachet that you would like to engage, you have to go through the quid pro quo, something for something. You have to go through the exchange. You have to initiate the economic event, and you need to take responsibility for it. The final part of this has to deal with the number 7, other. The state treasurer has to understand and accept what it is that you're trying to pay for, and if they don't, it cannot be marked, and you're going to have to put it somewhere else. You have to quartile this out. You have to fill this out. So if you want to put all in one, or you want to break it down evenly, that's up to you. But this has to be filled out at the time that you pay your taxes. My final thought on tax model: as a libertarian, I believe in voluntarism. I believe in the charitable society. I'm not going to argue the point. I'm not going to get in any more discussions about philosophy. I'm just trying to help people go through these, and these tax models are based on lean function. I am trying to get rid of the human element. I'm trying to streamline everything, to get rid of the overhead, to get rid of the production cost, to get rid of the wage labor that is the state government. And I know that for people in this area that might be a little bit of a problem because they would be losing their job. But we need to be able to have another conversation about this, because one of the things that needs to be required of the voter is that they need to start getting into the conversations about what it is that we're doing. And we need to be able to understand what it is that the government is going to be paying for, and how those expenditures impact our daily lives. In a way, tax model can help anybody move into macroeconomics. It doesn't matter that you've gone to high school or that you have a master's. The tax model is going to help everyone understand their place in our society. Again, my name is Stephen Wilson. I am running for Congress. I'm a Libertarian in Missouri, 3rd District in 2012, and thank you so much for your time.